Hi, Jim Romer from Weather Wealth at bestweatherinc.com. An exciting time in commodities once again, in certain grain commodities, precious metals like tin affected by the global green economy, and also some of the soft commodity markets, particularly like cotton, exploding right now because of inflationary fears and something we call a squeeze. Let's discuss what a squeeze is today. This is going to be discussed in my future newsletters at bestweatherinc.com. We don't really have a squeeze in orange juice right now, but it's definitely affecting some commodities around the world. As far as inflationary fears first, look at this over the last year, the inflationary fears pushing up spot crude oil as of December, natural gas prices over the last year, that they were down here the last few weeks because of a warm December, and farm prices going up as well. One of them was actually a squeeze in commodities. That happens when you have very limited supplies and strong demand, and commercial grain companies, natural gas producers, whatever, tend to buy futures in order to offset the risk of having to pay higher prices later. So when the spot cash price, that price which farmers basically pay out for crops, when that spot price is higher than the futures market and there's a lack of supply, the futures market has to actually catch up to the spot price. Now, we saw that in natural gas last summer. We don't have a squeeze right now in natural gas, even with this extremely cold weather. Look at this, 15 to 30 degrees below normal for the second half of this January. We don't have that squeeze, that spike you saw there on natural gas last summer because of stocks relatively satisfied right now for commercial producers and distributors of natural gas. The squeeze that really exists right now in the energy market is in crude because of OPEC concerns, inflationary ideas. And look at this, heating oil approaching a long-term resistance because of the very, very cold winter weather. Tighter supplies in crude and heating oil, and a squeeze situation occurring rather than in natural gas. That's why natural gas has been kind of choppy here over the last few weeks. The real squeeze that happened over this last year was, of course, in lumber prices. In other words, builders cannot get enough lumber to make houses, low interest rates, fueling inflation, incredible demand for lumber. And when that happens again, commercial builders have to buy futures, and that creates a squeeze in the actual cash market. In other words, as I mentioned before, backwardation in which the nearby futures contract is actually lower than the deferreds, and as a result, if there's a need to buy, say, bread by Cargill and Conagra and Nabisco in order to meet the needs of foreign demand, they have to buy futures, and that's when you have a squeeze situation. Will that happen again in some commodities? Hey, we're watching a drought once again here in red over the northern spring weight areas of Canada, as well as in the southern plains where the drought continues to expand. That could create a squeeze situation in wheat later on during the course of 2022. Inflationary spirals continue. Look how the CRB index, commodity index, is in a bull trend right now. Crude oil, wheat potentially again, heating oil, some of the other markets like cotton, and potentially grains if we get into further South American weather problems in the next month or two or next spring and summer. Going to be an exciting time ahead. We invite you to go to my website, bestweatherinc.com, and take a look at Weather Wealth and learn how to trade everything from ETFs in commodities to options and futures as well. Have a very nice rest of your week.